In F2, you look at all the things that we provide as information to people inside the organisation. Now, don't worry if you haven't done F2 yet. This is simply saying, what's the point of all of these things? F2 will tell you how to do it in a lot more detail. So cost schedules are basically looking at future costs. What are we going to spend the money on? Now, that's going to be useful if we're looking at a particular product. Perhaps we're going to be thinking about what price it needs to be charged at, so it's going to make some money. It will give us an idea, perhaps, of future cash flows. So how much money is going to be leaving the business. Budgets, on the other hand, are very useful for coordination. We have a sales department, and they have budgeted that they're going to sell 1,000 items next month. That's fine, but they can't sell those items until the production department have manufactured them. So production need to know how many are going to be sold. Production can't do anything until purchasing have purchased the raw materials. So the idea is purchasing buy the raw materials, production turn them into finished goods, sales then sell them. But all three of these departments have to coordinate with each other so you actually know what's going to happen. All three of them, of course, also have to coordinate with finance. Because if you think about it, what order does this actually happen? Purchasing have to buy things first. Then production have to spend some money, turning it into a finished good, and then sales receive the money. So purchasing comes first, then production, then sales. The money goes out, purchasing and production first. The money comes in through sales later. So finance have got to make sure we actually have enough cash and we're not going to go out of business. And finally, variance reports. If you have an adverse variance, and again, if you've not done F2 yet, that simply means something's gone wrong. If you've got an adverse variance, you can investigate it. You can try and find the reason for it. If you don't know something is going wrong, you can't fix it. You don't even know to look for anything. So an adverse variance, investigate, and hopefully try and fix it somehow. A favourable variance, which again, if you haven't done F2 yet, is basically something that's gone well. Find out why. Adopt it as best practice. So in other words, this is the reason things went well. Let's do that again. So there are various reasons why people need financial information inside the organisation.